Good day, everyone. Trust you're doing well today. Whether you earn 120K a month or you already have millions sitting somewhere, Nigeria is doing just one thing to all of us: inflation. It reduces the value of our money slowly but painfully. You save, but prices move faster. So here's the real question: where do some smart Nigerians invest money so inflation doesn't devalue their money? Stay with me to the end because by the end of this video, you would know exactly why this investment makes sense and how to go about it. So, what is fixed income fund? It's a pool of funds, by different investors, 10K, 20K, 50K, 500K, just, you having to like contribute to this pool of fund. Then United Capital Fund Manager, we don't utilize this pool of fund, to, invest it on the investor's behalf. The fund manager, buys government bond and treasury bills with this investment money, this pooled money, and your money begins to earn interest regularly. And that's why it's called fixed income. But wait, how exactly does this money turns into returns? So let's assume you invested 10,000 naira alongside with other investors who also invested money. Now, the United Capital, fund manager then uses this, money, this pooled money to buy government bonds. Technically, this bond pays interest every few months. However, you as an investor will always get, steady returns. Now, at the end of each month, the value of that fund shifts either up or down, fluctuates up or down, right? That's what I mean by that. Now, this depends on the interest that came in that month. So instead of buying just one whole bond by yourself, you can easily, own a small piece of, many bond. That's a smart way of making your money work for you, while you sleep. And guess what? It's very, very affordable to begin with, right? So you don't need big money to start. With just 10,000 naira, you're good to start. But there's a rule. You must hold for at least 90 days, which is 3 months, right? So if you try to exit the investment early, you will get charged 10% on your already earned interest, not your capital. Now, the investment is open-ended, meaning you can add more money at any time. So, how much can you really earn from this investment? This is where people get confused, but let's be honest. Nobody invests for vibe. We all invest to make returns. So, here's the truth, right? Some months, this investment beats the benchmark. Sometimes it doesn't. Now, what is benchmark? Think of benchmark like a set target goal for the fund manager, right? In essence, the fund is trying to beat what Nigeria government bond even pays, right? If it beats that, that's a year we go. It's a win. But if it doesn't, well, at least you still have your steady returns coming in. It's also important to note that all returns you see are after fees. So no hidden surprise, later on. But here's the real elephant in the room: inflation. The question now remains, can it really beat inflation? So, but before we continue or proceed to answer this question, if you're not yet subscribed to this channel, consider supporting the channel by hitting the subscribe button just down below. All right, so let's continue. Nigeria inflation has been wild, 20 something percent, but currently now down to 15.15%. So if this investment returns 20% or more in a year, your money is actually growing. It means you're winning. You're actually beating inflation. But if it returns below inflation, your money is still actually growing on paper. So you technically still win in both ways. But the truth is this: sometimes this investment beats inflation in some months, and sometimes it doesn't. And that's why you don't judge this fund by just 1 month. You watch it long time. 1 year, 2 years, 3 years. But wait, if inflation is scary, is this investment even safe, to invest in at all? Now that's a good question. So let's look into just how safe this investment is. So most of this money, right, goes into government bond and treasury bills. These are like the safest form of investment because government usually pays back, and that's actually comforting and reassuring. But don't get too overconfident because nothing is 100% safe. But yeah, the risk, small but real risk. First, interest rate risk. When interest rates rises, old bonds lose value. Second, market risk. Bond prices can drop before you sell. So yes, even though there's this little risk attached, it's still safe, when you compare it to stocks or equity mutual fund. Now, the next big question will be, who is this fund really for? Like, who should really invest in this fund? Well, this type of investment is for people who want steady income, less stress, long-term peace of mind. It's also good for medium-term goals. Like, say you have a goal for 1 to 3 years. Yeah, this investment is for you. Another set of people are, new investors. Then another set of people are people who hate wild swing, especially in the stock market or equity funds, right? Equity mutual fund. Keep in mind, your money is not locked forever. After 90 days, you can exit the investment. So, how do you really invest in this investment, right? It's simple. You would go to Invest Now or United Capital website, open an account, upload your ID. That's the KYC process, right, to get onboarded. So when you're done getting onboarded, you choose your fixed income, then fund with the amount you wish to invest with. Like I told you earlier on, you could start for as little as 10K, but whatever amount you choose to want to invest with, you're free to, and buy the unit you intend to invest with or you're comfortable with. And when you're done, all you just need to do next is just keep monitoring the performance of the investment. Or alternatively, you could actually invest via Carrywise app. Yeah, so it's doable via Carrywise app. So thanks for staying to the end of this video, and do not forget to subscribe. Bye for now.